Good afternoon, traders and investors. Will back here with another one, coming to you with a Friday market recap. Hope all of you had a very beautiful week of trading. Now, in today's markets, guys, we had a very wild day of price action. What started off as a very beautiful green with a gap up open, the SPY was up almost 1% in the early morning, and the QQQs were up almost 1.5%. And then they gave it mostly all back. The SPY ending red, and the QQQs giving back 1%. Major loss leaders on the day continued to be financials and healthcare. So we have a battle going on right now, a battle of rotation and a battle for the earnings spotlights as well. No major economic news today to warrant the give back, just normal price action, but this market continues to be one that is going to be all about earnings, especially through next week. So in today's video, guys, we're going to do a few things together. We are going to, number one, cover our major technical analysis rundown of our major market indexes, see how those are shaping up after the weekly close. Thereafter, take a look at our big tech names and see how those are shaping up leading into our massive earnings cycle that we have next week. No earnings in today's video, guys. We're going to save those for Monday. On Monday, I'll probably be doing EVVTY, Evolution AB, probably also covering Moody's Corporation, which we didn't do this week. And on the Monday calendar, we also have ON Semiconductor. I'll either do them or waste management, whichever one appeals to me the most in terms of which one has the largest move. So that's pretty much it for today's content. And at the end, we're going to wrap it off with all the trades that we completed this week. It was a very good week of trading. Once again, here you can see all of the trades, some beautiful wheel trades, all wins for the week on the wheel, some great directional trades as well, and a couple little hedge trades that I closed too. So we'll do a quick recap of all the trades that I concluded today at the end of the video, and also which trades I have remaining into next week, which is going to be an extremely heavy earnings week. So without further ado, guys, let's jump right into today's action. So SPY down about 0.03%. It wasn't always the case in the early morning. The gap up was very, very nice, as you can see right here. And then we kind of gave it all back, filling the gap over the course of the day. And the QQQs, largely the same price action. Huge gap up in the morning, and then we gave it mostly all back, not quite filling the gap just yet. Take a look at the heat map, guys. Once again, for probably the third or fourth time this week, we end up with a day where the bottom half of the market is just not cooperating at all. Heavy rotation, guys, away from financials, healthcare, the bottom half of the market, defensives, industrials, utilities, into some of your big tech leaders. At the early stage of the market this morning, the bottom half was actually doing very, very good before unraveling over the course of the day. So once again, guys, this kind of looks like the markets were back in April and May for a considerable amount of time, several weeks as a matter of fact, where market breadth was a concern. I don't believe that it's the same thing this time around, guys. QQQ, for the most part, has been fairly muted over the past 3, 4, 5 weeks at this point. And other than a few big tech outperformers, such as Netflix, such as NVIDIA, and such as Apple, which are at the all-time highs, Meta as well, you have a few major names that have been really lagging behind, right? Amazon not really eclipsing its all-time high, but it's close. Google lagging behind significantly. And one of your major weights in the index, guys, Microsoft always also lagging behind quite significantly. So some decent rotation back into the semiconductor trade as well. We'll keep a close eye on this rotation as it evolves. Still some very good opportunities, guys, in the markets if you're following this rotation closely. Take a look at the one-day relative. You'll see this rotation even better, guys. Only communication services and technology, a bit of consumer cyclicals and energy were in the green. Everything else to the downside, and some of them big to the downside, financials and utilities. Look at the 1 week relative performance, guys. Definitely a negative week for the S&P. S&P putting in its first weekly red close in the last 6 weeks. So a little bit of weekly consolidation underway. And we've kind of been hinting that that's a distinct possibility on the channel now for about the past 2 weeks. So everything pretty much to the downside. The only things that have etched out a tiny little bit of gains, communication services, which is led by Google and Meta, and consumer cyclical, oddly enough. Technology, largely flat, but everything else to the downside. Some of your major losers here, healthcare and industrials, which had been some of the outperformers in the last 2 months when we got the initial rotation from tech to value in late July and early August. So now these sectors taking a well-deserved breather, and it's nice to see that QQQ is there to pick up the slack. So let's jump into some more technical analysis right away, shall we? Looking at the SPY, Well, the SPY, all in all, guys, is now looking the worst, right? So we knew we had the context of a nice daily uptrend, and pretty much the bears at this point put in a daily downtrend to start off the beginning part of this week. Daily downtrend continues, possibly a lower high being set. And if we were to flush into next week, well, then of course, guys, we just continue this weekly consolidation that we've been talking about now for a few weeks running, right? The weekly still looks healthy. Anything above 540, just going to be looking for a weekly higher low for possible further trend continuation. And I do think that the bulls will react first from this level right here, 565 down to about 560. That is going to be your weekly big area of support, and the 12 EMA is sitting right there. So I wouldn't say the bulls have lost all hope. They still do have a chance at recovering this. I'm just giving the expectation in the event we roll over into further weekly consolidation, just so you guys understand who's in control right now. The monthly is still looking very nice. The weekly, tons of space. So the bulls, even though they are looking a little bit tired, I wouldn't say there's any major red flags in the indexes just yet. Moving on to the QQQs now. QQQs up about 0.61%, giving it all back. But the QQQs did do something significant, right? So if you take a look right here, in terms of the QQQs, nice daily uptrend, and then we lost it over the course of the week. Daily downtrend as well. And now the bulls putting in an engulfing move, but they need to capitalize right now, guys. We need to set up the new daily uptrend because one day of push is not enough. It's a very nice start, but if we roll over this hourly time frame, right? Hourly nice uptrend. If we were to roll this over into the Monday session, we have a very good chance at possibly retesting the lows or even flushing the lows. And at that point in time, well, I erased my boxes, unfortunately, to make a thumbnail. But you can see the support areas, guys, are pretty much clear as day, right? There's really two major levels that you have to watch out for. And the closest one is definitely the whole 480 down to roughly 475. That's going to be your next area of fairly large support for the bulls at this point in time. And on the weekly, a lot of space still, guys. Anything pretty much above this guy right here, 448, looking for that weekly higher low for possible further trend continuation. So the bulls do have a lot of space to work with. But of course, everything is going to be dependent on the good or bad earnings releases from all of your big tech names, guys. AMD, Alphabet, Microsoft, Meta, Coinbase, right? Uber, Amazon, Apple, all of the big ones coming out next week. MasterCard down there. You can't see it. Let me move my head over. MasterCard right here. I'm circling my mouse. So many big companies. Visa, Chipotle, right? McDonald's. So many big companies, guys, are reporting next week. So we're going to have a ton of opportunities. But in the event the market reacts negatively to the highest weighted ones in the indexes, we can expect possibly a little bit of a decline. And on the flip side, if all of these earnings are very, very bullish, I do expect the QQQ bulls to really start pushing this one a lot higher. Now, moving into XLF financials, definitely losing a big level right now. So we were on the watch, guys. This was a very nice daily uptrend, on the watch for higher lows into continuation. Unfortunately, the bulls could not get it done, and we rolled over. Good thing I told you guys, in the event we did roll this over, what we were expecting, right? So daily downtrend is underway right now, clear as day. And at this point in time, just looking for a very healthy weekly higher low. At this point in time, guys, anything truly, right? Anything above these guys right here, 4450, going to be looking for a weekly higher low for possible further trend continuation. I would look for areas of confluence, which is probably going to be this 46 level, right? Prior resistance, current support, and the 12 EMA should be curling up into that area. So we'll keep a very close eye on financials. They had this pop after their earnings, and now they're just giving a little bit back, setting up for some weekly consolidation. But as of right now, healthy consolidation to say the least. Moving into healthcare. Well, healthcare has been one of the lost leaders, guys, since the early portion of September. We've now been in a not only daily, but also weekly downtrend for all intents and purposes over the last almost 2 months at this point, right? So what exactly happened? Well, daily downtrend was underway. We tried to get the engulfing move, turn this into a daily uptrend, but the bulls failed. Roll this over, and now we're coming down into our major area of support, guys, which is a big one on the weekly, right? Prior resistance, support should be newfound support for the bulls. And at the bottom end, you have the 50 weekly moving average too. So even though it is a weekly downtrend right now, I'm expecting the bulls to start to play a little bit of defense. Just keep an eye, guys, on oversold conditions on the daily, right? We haven't had oversold conditions ever since the month of April. And usually when we get into them, that's when we can expect a potential, a potential area of defense to start forming for the bulls off of daily oversold. And nicely, it is having good confluence with the green box of support, and the 200 daily EMA is down in there as well. So expecting the bulls to react nicely from this. Just keep an eye on the higher time frames right now, guys. It is a monthly uptrend, still looking for a monthly higher low for possible further trend continuation later into the year. Anything above 137.50 on the monthly is the higher low for further trend continuation. My favorite two names are, of course, UNH. I've been bringing this one up a fair amount on the channel, right? Same concept, looking for the monthly higher lows for further trend continuation. 550 to 525 is the area that I'd like to buy. And AbbVie as well, looking for the exact same concept, right? Looking for the monthly higher low for further trend continuation. I'll be targeting 183 down to roughly 175 for the nice little breakout, retest pocket, and possibly run for a little bit of a swing trade. Now, moving into SMH, SMH actually moved up a decent amount today, but gave it almost all back. And that's because NVIDIA gave back most of its move as well. So what are they trying to do right now? The context is a daily uptrend. And then we came into a little bit of consolidation, right? Keep an eye on these lows, guys, because at this point in time, since we don't have a close above the level, it's kind of like a double top right now. In the event they roll this over and flush the lows, daily downtrend is underway, and we will start some periods of weekly consolidation. Anything above 214, looking for a weekly higher low for possible further trend continuation. And that higher low might come in down here if we really start breaking down below. 239 down to about 229 is the area that I'll be looking for. And the way I'm looking to play this, guys, is by writing puts on my favorite companies well below the current market prices. If we get a steep decline, it usually frees up some premium way below those areas of support. So I'll be looking at my favorite semiconductor companies in terms of those swing trades with some short puts, and I'll keep you guys updated, of course. But as of now, the bulls just still struggling with this overhead resistance zone, 260 down to about 251. So we'll see, can they power through and just continue this weekly uptrend as if the bears aren't even there, or do we give back a little more? In any case, guys, if we do drop, I still think it's a good buying opportunity. Moving into IWM Russell right now. So the Russell's still struggling, right? We know that the bulls had an attempt at trying to break through this big area of resistance, which is the area of resistance from 2020 and 2021, 225 up to about 235, let's call it, right? And getting consistently rejected the last how many times, right? 1, 2, 3, 4, 5 at this point, getting rejected quite hard. And I've maintained this opinion, guys, that the bulls can only really break through this area if we get a green light from everything right now. Geopolitical tensions coming down, fears of recession coming down, the most recent crazy rapid rally in your long-term yields. That also has to come down because these companies, especially your unprofitable growth stocks, they rely on debt to grow. So it stands to argue when the 10 and 20-year yields have a quick rally, even after some rate cuts, the IWM Russell is just not going to respond very well to that. So unfortunately, the trade getting kicked back once again. The bulls losing a lot of ground right here. This is a very big pullback, guys. Talking about roughly a 80% pullback at the lows. I would not be surprised if the best case scenario, the bulls are just able to maintain a tightening range as we continue moving through a somewhat uncertain economic landscape right now. The worst case scenario, of course, is setting up for the daily downtrend like it looks like they want to do. If that's the case, further weekly consolidation will be underway, and I'll be targeting possibly 213 down to 207 to reevaluate whether or not I want to take a position in this ETF. Moving on to the Dow Jones right now. Dow Jones losing everything in a big way, right? Dow Jones has really come down hard over the past week of trading. So they had a nice daily uptrend. Unfortunately, no new highs. Double top at the highs, and now we get the rollover. So daily downtrend is now underway for the bears. So we know that we're approaching, or we're now into weekly consolidation. But who's in control here, guys? You must see it now. The weekly bulls are still in full control. Anything above 39, let's call it 40,000 roughly, to be flat. 40,000 is going to be the weekly higher low that we need to respect, and we're just having a little bit of weekly consolidation. I have two levels to really watch out for. We're coming up into one of them. I mean, the lines are not very pretty right now, so let me just do one single line like this. That is right around your 50 EMA on the daily, prior support from the early portion of October. But if the bears just blast through this one with another leg down, just understand where they're going for. They're going for this location right here, the second larger area of support, arguably, where you have a lot better weekly resistance levels, right? From back in September, back in July as well. So that'll be a possible area if we break through the support number one, possibly going down to number two, still just looking for a weekly higher low for possible further trend continuation. So I don't really see any major red flags in the market just yet. But as I said, we're going to be completely beholden to all of these massive companies' earnings over the course of next week. So that's pretty much everything for our major market indexes. Let's check on the sub indexes, right? So consumer staples, they had been really hot coming out of the whole tech to value rotation. We broke out of a big level and now we've been in weekly consolidation now for about a month and a half, right? And all of these major sectors, while tech was underperforming, a lot of value was outperforming, right? We had a nice rally in financials the whole time. We had a very nice rally in healthcare the whole time as well, July and August. We had a very nice rally in consumer staples, and now those are all taking well-deserved breathers, looking for our monthly higher lows, and I'd be looking for 79.50 down to 79.30 for a possible retest and maybe run. Utilities as well. Utilities has been a very favorable trade, especially leading into the rate cut cycle. You can see that July, August, and September was very good, but now even them, they're getting a little bit tired at the top. So looking possibly for a little bit of monthly reversion right here, maybe coming back down into this whole 75 location. I mean, I can put a box right there if you guys really want me to, if it makes it easier. Support level would be roughly right around this location. So possibly even utilities looking for a little bit of give back after such a nice rally. All about rotation in these markets, guys. Real estate as well. Real estate was a very popular trade July, August, and September leading into the rate cuts. And now that yields have been skyrocketing, real estate has been struggling a little bit. If we lose this level, 43, over the course of the next weeks, weekly downturn is underway, monthly consolidation is underway, and we look to 41.50 down to about 38 to act as the next area of support for the breakout, retest, and possibly run. So keep an eye, guys, on these rotations. You don't need to watch them every single day, but at least know where we are on the weekly and monthly timeframes, please. Now, that's pretty much it for the minor sectors. Energy, we can cover it a little bit, but it's really been doing absolutely nothing for pretty much the last 2 years, right? We've just been consolidating at the top, really beholden to the prices of oil. And that one, we know that in the fall is usually seasonally a very weak period for oil before it kind of comes back into favor in the early months of January and February. Now, that being said, let's have a look at some of our yields, right? So let's take a look at the 20-year yields, guys. Up another 0.68%. Really overbought conditions, but it seems as though the market just does not care right now, right? So obviously I've explained this one over the course of the week. It's a very, very complex trade, this one, guys. There's not one factor at play here. There's the concerning debt levels of the US government that are being ran right now. There's obviously speculation by institutional bond traders on this trade right now as well. There's some obviously some give back because when we really accelerated the move to the downside, this was because the markets were fearful of a recession and we were pricing in more accelerated rate cuts. Now, since the interest rate decision, we've got literally nothing but good economic data. So yields have been pushed up by a number of different factors, but the soft landing is also a very heavy factor in there as well. There's also some speculation whether or not if former President Trump wins the election coming up in the next 2 weeks, that his tariffs will possibly lead to a resurgence of inflation. So obviously that's not very good. That would mean that rates stay higher for longer. So all of these very complex factors together. You can also talk about demand for US denominated bonds by foreign countries, which is not so large right now. There's so many factors at play with this trade right now, guys. All we can say is that for the most part, likely that the Fed is going to continue on its rate cutting cycle as it gave us the projections for through 2025 and 2026 as well. So longer duration, this trade should be coming down, but it's extremely, extremely tough, guys, to pick temporary tops right now. Bonds are a very, very, very complex trade. But suffice to say, the one thing that would salvage this trade is any bad negative economic data, right? That would really start pushing down your longer term yields because it would just reinforce that there are still some, red flags in the economy right now as a whole. So that is the one thing you will be looking for. If you're looking for a quick reversion of the 20-year yield to the downside, you're kind of looking for poor economic data at this point, or the Fed reiterating in 2 weeks its policy that it will stay the course with rate cuts right now. Now, that's pretty much everything for that. You can obviously carry the inverse analysis into the TLTs, right? If we're looking for bonds or yields to come down, that is the one time that the TLT trade will kind of find a bottom because it stands to argue very, very logical, right? When people are fearful, they usually go into cash and bonds. So there will eventually be a demand for 20-year bonds that are yielding right now about 4.6%, right? The only time that you wouldn't want to buy these bonds paying 4.6 is if you think things are going to get tremendously worse. And at that point, the Fed's going to have to, essentially cut interest rates in an extremely fast fashion, right? That is when your bond trade is really going to start accelerating to the downside. But if you're expecting if you're expecting yields to get even higher and higher and higher, well, you're kind of expecting those catalysts that we were talking about previously, right? The resurgence of inflation, the Fed keeping interest rates higher for longer type of thing. That is what's really going to keep bonds fairly muted. So that's pretty much the fact of the matter for that. Taking a look at gold right now, because we haven't looked at gold all week pretty much. Looking extremely healthy, guys. Looking very good for the daily uptrend continuation. Now, obviously, the higher time frames are extremely overbought here, and it's very tough for me to chase gold at a monthly RSI of 82, which is, by the way, the former cycle peak back in 2020 before we started tapering off. And every time, guys, look, we don't get much higher than this. 2008, 2006 as well, monthly RSIs 82, 84, usually somewhat close to a topping out of the gold market. 82 on the weekly RSI as well. The last time that's happened, well, let me just put a line right there so you can see how many times it's happened in the past. One last time in 2019 marked a temporary top. And before that, you'd have to go all the way back to 2012 to find a line touch. And once again, that was another cycle peak. So gold right now, chasing this one, guys, is very unfavorable risk to reward at this point. I would be more in tune to waiting for not only a bit of weekly pullback, and maybe even a weekly downtrend, or also even a bit of weekly downtrends leading into monthly consolidation, guys, right? So the gold trade, not for me right now. It was a very nice one that we were able to make back on the channel back here. But now at this point, guys, risk to reward is slightly unfavorable, unless, of course, you're day trading, right? So at that point, you're not really concerned about daily and weekly because you're trading the 1 or 5 minute time frames. Moving into oil, let's take a quick glance at oil. Oil's still doing a whole lot of nothing, guys. We know it's seasonally weak, currently still at around 2-3 year lows at this point on the barrel of oil. The expectation for the end of the year is roughly a median barrel around 75. We'll see if we get it or not. Very, very weak right now. And the only time this one will have a very rapid increase is as we saw in the last time it did it, roughly about a month ago at this point, was because of the heightened geopolitical concerns in the Middle East. So if we have a rising of tensions between Israel and Iran, expect this one to have a little bit more of a leg up. Now let's cover Bitcoin as well, because crypto as well had a bit of a pullback today, but nothing has really changed. We covered this one a few days ago on the channel, right? Daily uptrend was nice. And where we were looking for, guys, looking to get rejected in this area, which we did, 67 up to about the 71,500 range. That's exactly where the bears came in to play ball, essentially. And now we are trying to prevent the rollover into a daily downtrend, reacting nicely from our area of support, guys, 65.5 down to about 64. And that is because we are searching for the weekly higher low. So it was a weekly downtrend, right? You never had a weekly uptrend this entire time. The last one was all the way back here, right? And now we have our first confirmed weekly uptrend coming into resistance, looking for a weekly higher low, anything above 58,750 at this point, looking for the weekly higher low for further trend continuation. It starts to get a little bit dicey, guys. If we lose this support zone in a big fashion and give back all the move, unfortunately at that point, we'll have lost all of the weekly momentum and we may just be stuck in the gulag between these two levels a little bit more on Bitcoin. I'm still bullish on Bitcoin for the breakout coming into later part of the year. Weekly MACD is looking good, but sometimes short-term price action on Bitcoin is very, very tricky, right? So that's pretty much all the indexes and commodities, the yields, Bitcoin, all that out of the way. Now let's jump into some good stuff. But we're going to go through a few of these quickly because it's just very tough to tell, guys, what they're going to do with earnings, right? So Apple with earnings next Thursday. Let's take a look at the expected move for Apple. Expected move for Apple should be about 4%, never really more than that. It's not going to give it to us because we're after the market close on the Friday. So I guess they're updating. We'll do those next week, but usually Apple roughly moves about 4% after earnings. So if Apple maintains this tightening range that they have right now, we know they're locked between 238 and about 232 and about 228, right? Trying desperately to conserve the semblance of a daily uptrend, trying to conserve the breakout, retest, and possibly rally trade, and trying to also conserve the breakout on the weekly timeframes too. We will see if they can get it done, guys, but there's only literally 4 days of trading before Apple has its earnings. A 4% rally would send us well beyond the all-time highs, and a 4% decline after earnings from here would send us back into my area of support. This is where I would like to bid Apple, guys, 219 down to 215. You know, that's the number that I say on the channel. In all reality, I would love to pick Apple back down here around 205, 200. I'm not sure if we're going to get it. If we do, perfect, I'll bid down there. But shorter term, short puts, stuff like that, I may may be tempted, depending on what the overall markets are doing, may be tempted in that level. But short-term price action on Apple, guys, a bit tough to derive because they have earnings coming up. So we'll take this one day at a time, but I won't be positioning on Apple leading into earnings. I would rather wait for after the release. So we'll cover them a bit more in detail next week. But as of right now, didn't close the week too bad, still in a weekly uptrend, but they need to preserve this with earnings, because if they give back the weekly uptrend, guys, they're just going to get stuck back in this long range of accumulation right there, and maybe just due for a little bit more monthly consolidation too. Moving on to AMD right now. So AMD obviously also tough to derive because they have earnings come up on Tuesday. Let us see if this website will actually give us some expected moves. I should have probably written these down before doing the video, guys. My bad for that. AMD, same thing. It doesn't give us to us. So I might have just closed this website. We'll do them next week when we have more price action data. So moving into earnings, guys, AMD's expected move, I'll just tell you it right now. It's about 7.5% up or down. So AMD right now, the context, of course, we've been struggling right now. Daily downtrend. The bulls are trying to put in a rally to set up for the new daily uptrend, but it won't matter. There's only 2 days of price action, guys, right? We know we've been struggling with this area, this big red box, huge area of congestion all year pretty much since January. And now the bears have kind of taken control in the short terms. We are still in the weekly uptrend, but here's your 7.5% move. We know that the bulls are trying to set up the weekly higher lows for further trend continuation. Earnings will be the key. 7.5% rally to the upside. Perfect. You're going to start approaching the higher end of our previous higher highs, right? And you're going to be looking good for the weekly trend continuation. However, 7% to the downside, guys, and you take back all of this weekly leg of momentum, and the bulls may be trapped for an extended period of time between this resistance zone that we're currently battling and the lower range, 140 down to about 125. By the way, if we do come down here on earnings, I won't be positioning prior to earnings, but if we come down here after earnings, I'll be looking to bid a little bit at AMD. 140 down to 125 is my desired range for either picking up some shorter term call option plays like call debit spreads or writing some short puts. Now, but it should be a fairly good quarter for them, guys. We'll give a little bit of earnings preview into next week, okay? On Amazon as well, we'll do the earnings previews before every one of these the day before they happen, right? So AMD, I'll give you guys a more in-depth preview on the Monday session after the close. Amazon, once again, getting rejected right now. They were actually doing very good. Amazon was up 2+% on the day and almost gave it all back, right? So not a very good looking candle, still struggling with this 190 down to about 187 range. Not too bad though on Amazon, I do admit myself. We are just trapped right now, trapped in this kind of awkward price action. But what are the bulls looking to maintain, guys? They're looking to maintain this weekly uptrend price action. Amazon expected move is about 5.5% up or down. They have earnings coming up obviously next Thursday as well. So only 4 days of trading. I'm not expecting some wild moves on Amazon up or down before earnings. So I'll just give you guys the expectation on the weekly charts, right? 5% down would roughly mean we're going to retest the whole 180 to about 178. And if we come back down there, guys, yes, we will lose the weekly uptrend. We'll be in for a little bit further monthly consolidation, which we've been doing now for about 6 months on Amazon, right? Very, very sideways, but the bulls are well insulated. Huge area of support below us, 175 down to about 160. All the 2020 and 2021 all-time highs, going to be very tough for the bears to get through that one, which is why if we do come down here 175 to roughly the 170 zone, I will be bidding with some short puts and also some leap call options as well. So we'll keep our eyes peeled on Amazon. For Google, give me a quick second. Google with some bit of an outperformance today, right? 1.5% to the upside, looking quite good, but still no new developments in Google, right? Really trapped in this price action cycle. The best pattern we can possibly find is this inverse head and shoulders trying to take shape right now. In terms of their earnings, they have earnings on Tuesday. So only 2 days of price action. In my opinion, Google's not going to break the top end of this range, 169, 170. Probably not going to break the bottom end of the range either at 162. The expected move on Google is about 5.5%, 6% as well. So 5.5% to the upside would put us into this big area of resistance above us, 179 down to 171, but would look pretty good for a daily trend breakout and possibly retest. If we can't get the move done in one clean shot, they'll create a lot of space, set up for the two-step daily uptrend process. And to the downside, if ever we drop 5%, 6% to the downside, as was the case a few earnings ago, right? We saw it a few times on Google, as a matter of fact, but this one was most recently. If we do drop down here, guys, you guys need to understand anything under 160 down about the 152 zone. I will be looking aggressively for some short puts and also for some leap call options. So that's going to be looking very good for Google, guys, because this green box prior all-time highs from 2021, resistance here as well, and support after the Black Monday flush and after the later portion after their earnings. So that's not going to be looking too bad at all for a little bit of a bid on Google stock. At that point, Google will be down 20+% off the all-time highs. Always a good proposition to buy Google down there. Moving into Meta. Meta was doing good today as well and gave it mostly back. So daily downtrend continues to remain underway for Meta. Meta with earnings on the Wednesday session. So Meta is going to probably move about 7% up or down, a little bit more volatile. So even though the bears have the daily downtrend, what are the bulls trying to do right now, guys? They're trying to have some weekly trend continuation. We have the weekly higher lows trying to be set. Anything above 492, looking for the weekly higher lows for possible further trend continuation. Now, 6-7% to the downside, guys. Well, to the downside, that would mean that we would retest my favorite area, the prior all-time highs, looking for the breakout, retest, and possibly run later on in the year if ever earnings are not well received. I think earnings are going to be fantastic from Meta, but you guys know the drill. Sometimes when you have great earnings, Wall Street just sends the stock down anyways. It's happened a few times with their favorite companies, right? Even this one, they gave it all back just 2 short days later. So we'll see what happens with Meta. They've had beautiful earnings this entire year. Their guidance is good. If we retest this location, guys, 530 down to 516, I'm going to bid fairly heavy on Meta. And of course, to the flip side, if they get the 6-7% rally to the upside, well, obviously, guys, at that point, we'll be testing the 600 area of psychological resistance and just be on to another beautiful leg of weekly uptrend. The valuation of Meta right now is fairly cheap, which is why I like it. At 600, we did the valuation again, 1.4 peg at 600. So now it's even cheaper. Not too bad at all. Moving on to Microsoft. So Microsoft as well, not looking the worst today, right? They tried to push again into the whole 232, 233, but we've been talking about this, guys. It is a big area of resistance for the stock. So I think the one thing that's going to allow us to really push through this one and create a lot of space is going to be a bullish earnings. Earnings are on Wednesday. Microsoft moves about 4.5% off of earnings. So even though we have the daily uptrend here, it may not matter. If we get a 4.5% move to the downside, well, we could be looking, guys, at revisiting the lower 400s. And if we get any more than that, we're going to come into my favorite area for bidding Microsoft for a long-term portfolio, which is the 405 down to roughly 390. If we come down there, I'm going to be going very heavy on some Microsoft Leap call options and exploring the possibility of writing some short puts as well. But short puts for most people's accounts are fairly expensive. It requires about 40 grand in capital. So something more capital light would be something like call debit spreads or just a few shares for your long term or some leaps, even though the leaps are relatively expensive if you go in the money as well. And 4% to the upside, of course. Well, 4.5%, 5% to the upside, we will be retesting the 440s, 450s, blasting through this area of resistance. At that point, we'll probably just be looking for a higher low for further daily trend continuation, and we'll be getting some nice lift on this weekly uptrend formation as well. All in all, not expecting a huge miss by Microsoft. If anything, they should just come in line or slightly raise the bar again. Moving into Netflix, one of the biggest winners from earnings so far. Netflix coming down, down from their highs of the day, but ending roughly flat, right? So nothing to see here on Netflix. Huge earnings move, looking to set up for the daily higher lows for further trend continuation. Now, the danger, short-term red flag would be lower high into lower low, right? Because Netflix actually got the hourly trend back. If they were to lose it and flush the lows, our lower highs are set, lower lows are in motion, and Netflix embarks on weekly consolidation. Good thing for them, though, they have a ton of space. Anything above 661, looking for a weekly higher low for possible further trend continuation. So keep our eye on Netflix. Netflix will probably move with the rest of big tech earnings next week. But in the event we retest, guys, the lower 700s, I would not be opposed for the breakout, retest, and run trade later on in the year. So 710 down to about 700 would be the sweet spot for maybe picking up a few calls, call debit spreads, or shares, depending on what your preferred investing tool is for bullish continuation. Moving on to NVIDIA. NVIDIA not looking too bad today, but giving back a lot of its gains. It was up over 2% today and gave almost more than half of it back. So what is the context? Daily uptrend is still very, very strong for the bulls right now. Higher lows are set. And now we watch, guys, if they cut the low of Wednesday, which is 137.50, daily downtrend is underway on NVIDIA, and we embark on a little bit of weekly consolidation. But the bulls deserve it, guys. This has been 6-7 weeks of pure push by NVIDIA, right? Almost a 30+% rally, 38% rally on NVIDIA since the early portion of the month of September. So even if we lose this level, guys, is it that big of a deal? No. Our first line of defense is down here, 130 to about 126. The prior high is right there. And a larger area of support, in my opinion, if things really start getting a little bit tricky in the markets, right, would be 120 down to about 115. So I'll be keeping an eye on NVIDIA, guys. Even up here, a little bit too rich for me to throw a lot of size at it, but I wouldn't be opposed to taking a little bit of a swing trade, right? With the stop loss below, of course, a little bit of a swing trade with maybe some calls, some call debit spreads, just for the breakout, retest, and run trade. It's usually a very high probability trade, especially when you have the longer term timeframes in your favor, monthly uptrend and weekly uptrend as well. So I'll be keeping an eye on that, but probably won't go heavy. I'll go a lot heavier if we come into this area with some short puts. Moving into for the wheel strategy, right? Moving into Tesla. Look at this beautiful weekly close by Tesla, right? So looking very good. Obviously, earnings are behind us now. We got through the biggest catalyst and Tesla closing at the high of the day. Now, we are not quite through our big area of resistance just yet. That comes if we break the 273. Let's just call it 275 so we can include this lonely little candle right there. So about 275, right? We are in the resistance zone right now. And the next stop in the event we break through it is, of course, going to be the psychological 300. That has also posed a few problems for Tesla in the most recent years of price action, right? That being said, the bulls are right now in much full control. Even if we get rejected in this area again, there's a ton of space, guys. Anything above 212, we'll just be looking for a daily higher low for further trend continuation. If you want to know when the bulls are done, guys, just keep an eye on the hourly trend change, right? RSI is blown out of proportion right now on Tesla. No secret there, but watch. It's very tough to short here, guys. If you want to short, need to wait for the loss of the hourly time frame because it gives you an area to base your trades off of, right? If you tell other people, don't buy a falling knife, well, this is the inverse of a falling knife, right? So don't try to short the market without confirmation is what I'm trying to say. I'm not opposed to a little bit of a swing trade short right here, but at least, guys, wait for a 15-minute downtrend confirmation leading into a possible hourly downswing and maybe even an hourly confirmation if you're more of a patient trader, right? It just gives you a level. When we get the break on the hourly time frame to the downside, you get a much tighter stop loss, right? So that's one of the things that I love to do, guys. I'm not opposed to going short, long on anything. It's just please wait for a confirmation, right? So that's the moral of the story for Tesla right now. Looking good. The weekly is still in a very nice weekly uptrend as well, but I do think that this one will be affected by big tech earnings next week too. Even though they had their earnings, they are beholden to the price action of the QQQs, right? If you see all of big tech red all of next week, do you really think Tesla is going to be the only green stock in the market, even though earnings were well received? Probably not. It'll probably benefit from the red to take a bit of a healthy pullback, right? Moving into Palantir right now, Palantir up 3%, didn't even care, didn't even pull back a little bit. And now Palantir, guys, with the continuation of the daily uptrend. So we were on the watch for the rollover, such as other big tech stocks did, but Palantir not one of them. So now we're approaching the next psychological area of resistance, 45. Tapped on it today. The next one, of course, guys, is going to be that $50 psychological, because in my humble opinion, these resistance candles are not really resistance at all. Those are intraday price movements. They never even closed a candle up there. And if you don't believe me, just go back on the chart, right? No daily candle closes there. So I don't believe that this is a very solid level where we are right now, right? So moving in, 50 is going to be the next. I feel like I'm always scrolling forever when I do this, right? So moving on to, there must be a button around here somewhere to just bring me back to current, but whatever. So moving on, daily uptrend is clear as day. Bulls never having lost control, clear daily uptrend. Higher lows are set, anything above 40.44. Still just looking for a daily higher low for further trend continuation. And in the event we roll over with big tech next week, because Palantir does not have earnings until 2 weeks from now, 2 Mondays from now to be exact. If we roll this over, you guys know the drill. What are we looking for? Simply looking for a bit of weekly consolidation for a possible next leg up. And that's the consolidation that I've been looking for. I don't think the risk reward on Palantir right now is very favorable. Congratulations to you if you bought the dip here and now you're up, right? But just not my style. I mean, it's a good style if you keep a tight stop loss, right? If you see the lows right here, buy here, put a stop loss right there, and you're going for the trend breakout, that is fine, right? But if you're taking a larger size position for some weekly continuation at this point, the risk reward is not very favorable, right? Especially if you're trading on the longer term time frame. So just keep that in mind. But as of right now, guys, the bulls are in absolute full control of this chart. Nothing much to see here. Congratulations to everybody for their gains. And keep in mind, even though I'm looking for a pullback on Palantir to play it down here, guys, I've been a long-term Palantir shareholder. I mean, I was buying the stock down here when nobody wanted it, right? Down here, averaging a little bit. Admittedly, I started buying the stock back in 2021 with the rest of everybody. DCA, 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 DCA gives me a cost basis of roughly 1150, 1160-ish. So I'm riding with you guys, right? Totally riding this one. It's just I'm not buying more up here, right? It's a little bit pricey in relation to, a more fair valuation, which in my opinion, being a Palantir shareholder, fair value at this point, even with all their growth in the future, is probably sitting right now around the mid $30, and that's being very, very fair, right? So all of that being said, guys, that's everything in terms of our market recap for the week. Now let's dive into a few of the portfolio positions. And before we cover the existing positions, let's go over a few of the trades that we closed. So I covered a lot of these with you guys over the course of, I think we did them yesterday quickly as well as well. So just take a look at some of the wheel trades just for a recap. I covered a lot of these on the Monday and Tuesday recap and the yesterday recap as well, but we had a few wheel trades. A lot of these were on the top 5 options plays, guys. ON was a top 5 options play Sunday video. Elf Beauty was, Chewy was as well, right? BITX, I've been talking about it for a while. All of these wheel trades, maybe just the Coca-Cola after earnings, you guys wouldn't have seen because, it was during the day at that point, and Enphase as well, which was a longer duration swing trade, which we closed in one single day, pulled forward 40% of the premium. Once again, I explained that one yesterday at the end of yesterday's video, but if you want me to recap, I'm never opposed to selling short puts, guys, with longer durations, right? You don't see me do it too often, but I wait for daily oversold conditions at a level that I like, and then I write more time on them. I give them more time because when we get a rally, it pulls a lot of the premium out of that contract very, very, very quickly. So the moral of the story for this Enphase trade, we took these 70 puts at the low after earnings, and we got $3.10 for credit, and we closed them at $1.90, right? 40% of all these 6 weeks of premium in one single day. So I'll ask you guys the question, is it worth it for me to hold $7,000 in exposure for the remaining 60% over the next 6 weeks? Or should I just take that capital and find another play? Well, obviously, guys, if you make roughly half of the trade in one single day, you're not going to wait 6 weeks for the remaining half, right? You're going to take the capital and you're going to allocate it to a new play, especially when you have all of these juicy earnings coming up. So hopefully that makes sense. We're just trying to be capital efficient right here. So that's a recap on the wheel trades. In terms of the directional trades, I told you guys this one, McDonald's, this was a scalp trade after they came out with the bad news. They were down about 10%. The RSI was crushed, absolutely crushed on the shorter term timeframes when they came out with that news. You can see it down here. The RSI on the hourly at that point was down to like a 13, and on the 15-minute, it was down to like a 7. Like a 7 RSI, guys. You have to buy those dips. Now, I know it can always reverse down later, but you have to buy those dips because usually you do get a nice bounce. And we closed it in the after-hour session. This was like a quick scalp trade. We bought the 280s, 285s down here. Well, where is it right now? I can't even see it on this chart because I don't have extended hours on the chart. That's why. So extended trading, we bought this. That's why the RSI wasn't correct as well when I was looking for it, but the hourly was crushed too. We bought the lows, 285, sold it for 296 in the after hours, and we're out. I'm not opposed to playing McDonald's again as they move through this E. coli news, but the next area that I want McDonald's at, 280, guys. I want it 280, 275. If you give me that, it's going to look very good for monthly, right? Just looking for a monthly higher low for possible further trend resumption. When we get through the E. coli negative news, 280 to 275 would be looking where I'd be looking to build a position there. So that was the directional trade on McDonald's. Microsoft, you guys have seen me take these Microsoft trades now over the past roughly 2-3 weeks, right? So it shouldn't be a secret to you, but for all of our new viewers, we've been building a position on Microsoft in the 415 range because we weren't sure if it was going to kind of curl up and break from here or curl down. So we started building positions here in the event that if we were to drop in my actual desired support range, we would build into the positions more heavily. So I built a lot of call debit spreads right there, and I did throw a leap contract call at this one as well. And now we are decently in profit. So on the Wednesday session at the highs, I closed one out of 6 different call debit spreads. And you can see them right here, as a matter of fact. We have 2 different ones, one for December and one for February. So obviously I closed the shorter dated one. We got into them at 210, and you can see the closing trade right here was about 234, 11.4% ROI in 3 weeks, because we've been holding those Microsofts now for about the 3 weeks worth of time. We bought them a little bit earlier. So I closed the shorter dated one, still have one contract, and still have 5 other contracts for February, on which we are up very nicely right now. Moving on, EVVTY and Louis Vuitton, those are trades that you saw me take over the course of last week. EVVTY, it was a very simple one. I've been explaining to you guys that I love this valuation. I think I talked about this one yesterday, but since we're doing a full portfolio recap, I'll talk about it again. So EVVTY, I thought the valuation was very, very cheap down here for this company. Company has tremendous net margins, 50+% net margins, guys, and very good EPS growth prospects, very good revenue growth prospects, and the balance sheet, I mean, when you make so much cash, guys, you have no debt. You have huge free cash flow, and now they will start buying back shares as well. They just had their earnings yesterday, so he bought this one down here in my desired target range, which is why I always tell you guys, never chase a stock. When you're looking at a lot of stocks, you will always have an opportunity. You may remember I took the exact same trade, guys. I took the exact same trade back here, and I sold it back here. And now here we are again in my desired range. I'm taking it again monthly. Big, big, big tight range of accumulation, right? So every time we come down into the low 90s, I'm always a fan of buying this one. The take profit was here, didn't change this area. So when it came into it, I took profit. We took half of these shares off. It wasn't a very large position, but I'm just trying to show, the moral is not how much size I put into these guys. You guys have known me so far, right? The goal is not showing you guys how much size you can put into these trades and showing you guys fantastic P&L. But you will notice, right? Our win rate is extremely, extremely, extremely high. I could turn up the size if I want. That's not the point. The point is I'm trying to show you guys how to be patient, let the market come to you, go for high probability setups, and then respect your stop loss and take profit levels. So respecting my own rules, took half of them off the table, 13% ROI in 1 week. I will take it, guys, right? You can replicate this trade with any size you want, so long as you're respecting the strategy and have good trade management. That's what I'm trying to teach you guys. About a year ago, up until about 3 months ago, I wasn't doing any call debit spreads, wasn't doing any put credit spreads and stuff like that, right? I was only doing the wheel strategy. But a lot of people don't have access to the wheel strategy, and I was going with some heavy position sizes, right? 20K, 30K, 35K, but not a lot of people have access to that. So now I'm showing you guys a bunch of other strategies that you can use with either shares, call debit spreads, and things like that, right? Long call options. You guys see me take those trades as well. So I'm always a big fan of, teaching first. And, of course, as I said recently, I'm now starting after 3 months of smaller account strategies. I'm getting back to the roots, and we're going to go for bigger trades now, right? Bigger trades, more size. So I personally think I've done a good job of showcasing these smaller account strategies on the channel with a lot of success, both for you guys publicly and also for our Discord members, right? Very, very high win rate for most of them. And they're very conservative trades, right? It's not as if I'm chasing anything. All of these are on names that I talk to you guys about all the time. Louis Vuitton, same concept. Louis Vuitton, LVMUY, came down into our desired target range, which was roughly the lower end of support down here, right? The whole 140 down to about 124. Now, I saw an opportunity when the company released earnings midway through the day, and the company was almost daily oversold, but they were definitely short-term hourly oversold by a lot. Hourly was crushed, as a matter of fact, down to 14 RSI. So I went in with a bid, 128, expecting a little bit of short-term rally. I knew that the context of the trade is we're still in a daily downtrend. We're still in a weekly downtrend. But when you get short-term oversold like that, usually you do get a decently sized bounce. And that's exactly what we went for. And when we got the bounce, we sold out at the desired bounce level. And the bounce was fairly good. So took the profits, guys. Nothing wrong with taking profits, right? 128 to 137.15, 7.1% ROI in 8 days. Always focus on ROI per day, guys. Never focus on dollars. If you start trading based on dollars, guys, you're just going to take wrong trades. You're going to FOMO. You're going to cut stop losses when you shouldn't. Always focus on the ROI per day. This is how we scale accounts. And I tell people this all the time, guys. Focus on the ROI. Trade the chart. Do not trade the P&L. Trading your P&L is the worst possible thing you can do as a trader. You will get mentally stuck on round numbers. You'll see $500 in profit. You'll take profits, right? Screw the ROI per day. Screw everything. Screw the take profit level. You'll see $500. You'll just take it. You'll see $1,000. You'll just take it. Trade the chart. and trade the ROI per day. It's the best piece of non-financial advice that I can give you guys, right? Now, moving on, that's the last one for that. And now lastly, the Google. So we took the leap, the covered call leap off because I'm bullish on Google earnings. This one is pure speculation, guys, right? So we held the Google covered call on for about a month of time. We opened it early September, guys. Early September, I'll remind you, was when the markets were really not liking what was happening currently, right? So we opened this at the early portion of September. It paid out decently for us for quite some time. Well, for about a week of time. And then we kind of came up and the contract was just bleeding out theta, right? So I'll remind you, I wrote these for about $6 at the 165 strike on Google, which would have given us a potential exit of 171. We never got up there, so the contract was just slowly decaying. We've been sideways for a month. We got through a lot of the volatility in the markets, a lot of the catalysts, right? Recession concerns, election concerns, earnings concerns. Now that we're a little bit through earnings, we can see the tone, and the tone overall is quite good. We've seen Tesla, we've seen Netflix, we've seen other guys report fairly good earnings, the bank, stuff like that. So I'm not too concerned. So I took the hedge off, and we're pretty much going for a Google rally after earnings. Now, obviously, I could eat my words and it could come down and this leap could give back a lot of the profits, but I'm fine with that because I will be looking to shop for another leap down here. So it's pure speculation. I could have held this one through earnings. I'm having a bullish lean, so I'm taking the hedge off. It's been on for a while. It's served its purpose. Now I want to potentially take a little bit of a gamble on Google earnings, right? So take from that what you will. Pure speculation, guys. If it was to be technically correct, you should actually leave these on, but I want to take the chance for it, guys. I can afford to take the chance. No offense or something like that to anybody else. If you're more conservative, if you have less capital, you probably want to keep these hedges on. I'm just explaining why I took them off. And lastly, the SQQQ. So you might remember I had these SQQQ hedges, and also same thing, right? Where did we take these hedges? I'll take you back to where we opened these hedges. The day, as a matter of fact, was the day all the way back here, right, was September 4th. So a bit of the context of where we were on September 4th on the QQQs, just to bring it up, right? This was a hedge on September 4th. So let me find September 4th. September 4th was right here. So we were in jeopardy possibly of setting up for the weekly downtrend. And that's what I was worried about because at that point in time, the economic data was not good. Now we have almost 2 months more of economic data. And as you can see, the markets have responded fairly in a bullish fashion to it, right? But back here, there was still a lot of uncertainty in the markets and a lot of things that we were moving into. September, which is usually a negative month in terms of market seasonality, we actually had a green month. October, which is supposed to be a red month for markets, usually we had largely a green month as well. So this hedge was put in place with a lot of good, a good thesis, right? We have bearish seasonality, geopolitical, very heightened tensions at this point. Recession narrative was well underway, and election uncertainty, right? Still a long ways away from the election. There was a lot of things happening at the same time. This was before the China stimulus news as well. So I threw on the hedge. It's insurance, right? So it's natural that if it's insurance, you're not expecting the insurance to actually pay out, right? Every single month, guys, I pay insurance for my apartment, for my condo, right? But I'm not expecting it to burn down every single month just so I can claim my policy. That's the nature of a hedge, right? So if we would have wanted this SQQQ trade to go up, it would have meant that the roughly $100,000 in exposure that I run on a weekly basis in my portfolio would be bleeding a lot more than the hedge would have been up. So yes, we took a little bit of a loss on this one. If you want the dollar amount, it's about $750. But in the grand scheme of things, I was hedging over $100,000 of long exposure at the time. So I closed the hedge today, leading into bullish big tech earnings, leading into QQQs being at all-time highs, leading into SPY being at all-time highs. You can argue that now is the actual time that you should be hedging. That's a very good point, but I will only put these back on, guys. I will only put these back on if we are in jeopardy of losing a weekly uptrend with big momentum to the downside, right? I'm not trying to pick the top of the market and open up the hedges here and then open more up here, open more up here. No, I'm waiting for my confirmation, waiting for the weekly to be in jeopardy. Take back too much of the move, engulfing move, something like this, set up the lower high, perfect. This is where the hedges go. If we start rolling over on the daily, perfect. And then we watch, right? But I need some confirmation for these hedges. That's why I've taken them off right now. Still riding the TLT. So that's all the recap of this week's trades. Hopefully that was helpful in terms of which ones I have. Well, to be very honest with you guys, I have almost full buying power going into next week. And that is on purpose because a lot of the best companies that I like playing the most are all reporting earnings next week. So I freed up all the capital, closed a bunch of profitable trades, and we're just going to free up all the buying power possible to go into next week. So nothing has changed. ASML, still here, guys. Still looking for the swing trade. Still have both of those positions. I've explained it a few times so far, but if we want to recap very, very briefly, ASML, just looking to pick essentially the monthly lows and then looking for the eventual slow recapture right down there of the weekly timeframes eventually, right? First has to start with the dailies, of course, but I like this area on ASML, and I'll continue to bid down here, 680 down to the low 600s. I love that area. I think the valuation is decent, so we'll continue bidding. It's a longer-term swing trade for me. ATD still stuck in this one. This was a wheel trade. We're currently down on it. Our cost basis is a bit lower than our assignment basis right now. It's about 77.46. They've been getting hit because they've been trying to acquire the chain 7-Eleven, guys, which is a Japanese company. They've been trying to acquire them for over $50 billion. So since that news has kind of hit this stock, usually it does very, very well. Very, very strong stock, very solid fundamentals. But, any company outlaying a takeover bid for $50 billion, it's going to raise some questions as to how they're going to fund it, whether through debt, through an equity raise as well, share dilution. So far, 7-Eleven has not entertained the offer. And if they completely go back on the deal, I expect this one to recover a bit quickly. But that's the reason for their most recent negativity in terms of price action for ATD. It's a Canadian company. You guys may know it in the States as the owner of the Circle K brand of convenience stores. So yes, you can see all analyst price targets are above. EPS consistent, revenue consistent the way I like it. So no problems there. I'm not too worried about this one. BITX, this short put right here, the 29s, they expired worthless today, and we wrote some 2 weeks out. I went for the election week. I went for the rate cut week. Maximum volatility. Give it to me. If we get a sign, guys, we got $2.35 in credit. That would put us at roughly, let's just call it 27.65 on Bitcoin, on BITX. And at that point, Bitcoin, in that respect, Bitcoin would be roughly 63K. All right. Roughly 63K. And if we come back down to 63K, guys, I'm a buyer anyways. The covered calls on BITX are super juicy. Not worried about this one at all. We've got some very good premium, right? This is like 8% almost for 2 weeks of time. So looking good on that. I also continue adding to my BRK swing trade position. We're roughly down about 20% on this one. See, they try to log me out again, guys. I'm building a position on BRK. I've explained this one a few times. We're going to do these quickly because we're running out of time here. Right? So BRK, I'm a big fan of building a position, looking to build a position for this weekly consolidation. Same thing as here, looking for the weekly consolidation, eventually the breakout, just looking for the monthly breakout, retest, and possibly run. So that's the trade on Berkshire. Man, they're going to do it again, right? So let me just, shouldn't show you guys this, right? I shouldn't show you this, but let me just type in the, because it's not the right password. So I have to log into this because actually, you know what? So I paused the video. I remember somebody told me just pause it on OBS. So that's exactly what I did. So coming back into the portfolio, right? We still have the BRK trade. I just explained that one. CrowdStrike, still have that swing trade. Explained this one a few times, but we're just looking for the weekly trend continuation pattern. So very, very simple trade, right? Just looking for the continuation pattern on CrowdStrike, looking to move this one a little bit higher. Looking at Disney. Disney is a longer term swing trade for me, looking to recapture the roughly mid 100 levels, 105, 110. Have a longer duration leap on this one. We're up almost, 50% on it. So it's not looking too bad. Elf Beauty is the one that expired today. This one will be just expired worthless. So very nice wheel trade. EVVTY, the remaining half of the shares. Google Leap, of course. Intel, December 26th, $30 calls. Recovery story trade for me on Intel. I mean, we are up on these Leap contracts, but it's kind of like a set it and forget it position. Intuit, still in the Intuit swing trade. High conviction stock for me, looking for them to protect this area down here, 620 down to roughly 600, just for a little bit of a swing trade back to the highs. So we'll see what's happening with them. Moving on down the list. MO, I explained this one the other day. So we have a $45 call in the money for March in next year. So MO, very, very simple, guys. One of my favorite patterns, right? Looking for a breakout, a retest, and possibly run. See it best on the monthly time frame as well. Breakout, retest, and run. And that's just because Philip Morris posted very, very beautiful earnings just last week, right? Where they rose pretty much 7 and 10% pretty much. So I'm expecting MO, which is also a tobacco company, to kind of follow suit. They have earnings over the course of this week. Microsoft, already explained that trade. I'm in that one. Micron, those are the Leap calls, not touching those. NVO, this one I've explained a few times, guys. losing position. We're going to hold this one through earnings. This is one that I kind of let run away from me. Not very good risk management from myself. I told a lot of our members that were in this one as well to close it. I was going to keep this one as kind of a lottery gamble at that point. At that point, we were already down about 60%, but I wanted to just ride it through, right? Ride it through, and we'll see if we can get any back on earnings. But this one is going to be probably a resulting loss. OXY, still in this one, guys, still a wheel trade at this point in time. Our average cost on OXY is not that high, admittedly. It's about, I think it's about 53.17. I showed it to you guys yesterday, 53.47. So we're not that far away. We'll continue looking for some covered calls. And thereafter, guys, Square, we got the leap calls on Square, $100, looking good, still up about 50% on those. All the TLT hedges, right? Most of that is in shares, so I don't have a time constraint on these. But once again, just a hedge in the event we get bad data, TLT should respond well. We have a bunch of calls put on these, so we'll see what happens with these calls. But once I send, guys, just looking to hedge a 100K exposure portfolio. And then lastly, guys, we have the Twilio call, which is also a leap call trade. We're up roughly 8% on those, but I have so much time on these for my thesis to play out. I've explained it a few times. So that's pretty much everything that we had on the channel, guys. Hopefully you guys enjoyed that. If you did, consider dropping a like. Would really appreciate it for the growth of the channel. Consider subscribing if you're new as well. Would love to have you back. And also, if you have any questions, always feel free to leave a comment down below. And if you are interested, guys, in joining the Discord, getting all of my trades live, the private live streams, the private videos, chatting with myself and members, asking me questions all day, the link to the Discord is always down below. So feel free if you're interested. Take care. See you guys over the weekend, and peace.